Hello, I'm Charles Boettcher, Managing Director and Senior Portfolio Manager at City National Rochdale. Welcome to Market Perspectives. A quick update this month, and then we'll get you back in this summer swing. No material changes from what we discussed in the mid-year market perspectives last month, but let's check in on the markets, which continue to move higher. We are about halfway through the third quarter, and so far, it's shaping up more like the second quarter than the first. U.S. stocks across the board, large, mid, and small, declined in the first quarter, bounced back in the second, and now we're up more than 3% respectively here in the third quarter. The numbers in the bottom left of the chart are through July 25th, and since then, large and small are up from that date, while mid-cap is flat to slightly down. The S&P 500 is up over 10% year to date, reaching new record highs seemingly each week. And as we noted prior, the move from the April lows has been impressive. Now, while international indices still have the year-to-date advantage, driven by the strong relative returns in the beginning of the year, since April, however, returns have been more evenly distributed, and here in the third quarter, it's been a familiar story, where we see U.S. large cap, particularly the Magnificent Seven, leading the way. And while valuations in the U.S. remain high, European valuations are higher when the currency impact is removed. We are currently in earnings season, sifting through the second quarter reports. So far, the results have been better than expected. There had been concerns that the tariff impact could upend what had been a robust run of earnings growth. Results have been mixed but positive. With roughly half of the S&P 500 companies reported, second quarter earnings are good, albeit not on the same pace with the first quarter's strong results. Communication services, information technology, and financials are leading the way, with materials and the two consumer sectors lagging. As you can see at the bottom, earnings per share growth estimates remain in the low double digits, which is one reason we are still optimistic about long-term U.S. stock returns going forward, even at these valuation levels. Given where we've seen recent strength, combined with relative valuations and fundamentals, City National Rochdale is focusing on the sector allocations as depicted here. Exposure to some more defensive sectors assists in keeping overall portfolio risk levels within an acceptable range, somewhat offsetting allocations to higher beta areas like information technology. Summer has been good to us, but managing portfolio risk is necessary given that the S&P 500 is at an all-time high. Valuations are high, about 2/3 of stocks are above their 200-day moving averages, and the threat of tariff impact to margins and consumer spending remain. Investors should be prepared for volatility and some consolidation. After all, it can't be sunny every day, even in summer. I'm Charles Boettcher with Market Perspectives. Take care.